In today's Farm Report, global economics will impact agriculture, especially for the next generation of producers. Jim Sulphur with the University of Minnesota Extension Service Office has more.
Talked a little bit about young people and that the world that they live in is very different than the world that I grew up in and many listeners have grown up in. And I think the same is true in agriculture if you're in that industry, and I would argue maybe everybody in the industry or in the world is very different. We need to think much more globally because global economies have a much bigger influence on the prices we receive, especially the dairy industry. 20 years ago, the dairy industry was reasonably insulated 20 to 30 years ago from kind of the world markets, and now with all the exports going on, it's very differently. So when you think about what your strategy might be going into the future, from signing up for government programs to locking in milk to protecting your risk, you really need to be looking a lot more than just what's happening in the U.S. Because when you look right now, it's kind of interesting. The U.S. has been a little insulated. I know our milk prices haven't been really good, but if you look at the rest of the world, our milk prices are really good compared to there. If you look, cheese prices have been bouncing around in the $1.60 per pound range in the U.S., but if you look on the world market right now, cheese is about $1.10 to $1.15, and so things could be quite a bit worse. And particularly in New Zealand, that exports a lot of cheese and powder, their prices have been really low, lowest they've seen since 2009. So my point is that we really need to be thinking a little bit about that. Right now there's a glut of milk on the world market. Part of that is due to a lack of imports. China's imports are down about 40%. Russia's decided that they're going to put a ban on just because of the geopolitical environment. Mexico imports have been really strong, but recently you've seen these oil prices really crash, and so that really does affect Mexico's market because they do export a lot of oil into our country, and that's where they get a lot of their money. So that may soften up a little bit too. So the point is, I don't have any really good answers. But really what I'm trying to say here is, as you think about moving forward and looking at some protection programs, whether it's a margin protection program, which has to be signed up for by September 30th, or any other kind of risk management programs, it's really important to think a lot more globally about what's happening and how that might influence your commodity prices. And it's not just supply and demand of your markets. As I mentioned, oil for a lot of these countries is a big driver, particularly if they're big exporters. That's where they get the money to import these products. And so if oil prices really dramatically drop, that may also have an influence on whether they're able to import our dairy products or purchase our products into their market. This has been Jim Sulphur with the University of Minnesota Extension in St. Cloud.
The U.S. Department of Agriculture's Commodity Credit Corporation is set to release its September lending rates later this morning. Rates have remained unchanged throughout the summer, but that could change. Farm news available 24/7 at fallsradio.com. Volatility has always been commonplace in the agricultural industry. Jim Sulphur with the University of Minnesota Extension Service Office talks about the last 20 or so years of volatility and how producers can manage their operations to plan and weather the system.
Over the last 20 or 30 years of volatility in all of agricultural markets, both from an input standpoint and a sales standpoint, has really increased. And so I think it's important that producers really think about having some manage or some ideas on how to manage that volatility and what they might do. Some of the things you might really consider and want to do is you might want to consider looking monthly or quarterly at your cash flow situation and kind of determine if you're going to have adequate money to pay off, and make sure you have a line of credit or something if that volatility is increasing dramatically, because you really don't want these open accounts to get fairly large, because typically those people, because they're unsecured creditors, I'm not blaming them, interest rates are fairly high, so you're usually a lot better off borrowing that money from the bank. It's important to understand your break-even cost of production based on some futures prices or maybe for the rest of the year, and then look at how accurate those are being tracked. So if you're looking at futures and all of a sudden futures prices begin to drop, and as you're moving forward, you might need to adjust those. I think the year the years of when we do kind of an annual cash flow and then hope that plans out might be over. We might have to look at more of a quarterly or a semi-annually, depending upon your financial situation, and readjust maybe how you're thinking, whether it's capital expenditures, maybe it's something else about your business, but you really need to be thinking about that and looking at those cash flows. Then I think we're going to need more working capital than we've had in the past, so money that's lying around that we can use in case of these shocks to the market. And then along with that, you really need to probably calculate your burn rate. And what I mean by burn rate is how long you can afford to lose money before all your working capital is burned up. I think this might be real particular right now for some of the cash crop farmers. Land rents have been really high. They tend to come down a lot slower than maybe they go up for sure, and they've come down slow, and so many people will be losing some money this year. But I know it's really hard to give up rented land that you have, and it's hard to negotiate lower rents. And so you might want to calculate a burn rate and determine how long it's going to be before you just can't afford to keep that land that you're losing money on. Maybe that rent prices are high. But I think it's important to be thinking about this. There's a lot of options. One option is, of course, to do nothing. That's what a lot of producers do. But you really need to have a visit with your lender and make sure they understand what your risk management strategy as you get forward with these volatile prices. Because I would suspect that, as much as we'd like, they're probably not going to get better as we move into the future. This has been Jim Salfer with the University of Minnesota Extension in St. Cloud.
Might there be a slowdown in U.S. agricultural productivity growth after 6+ decades where ag output doubled? USDA economic researchers looked into that possibility. And according to economist Sun Ling Wan,
we find there is no statistical evidence showing there is a productive slowdown in the U.S. agriculture sector for the last 6 decades.
However, the study shows if the cost in public ag research and development remains unchanged through the year 2050, then the annual rate of productivity growth may slow down by that time. That's despite a faster rate of investment in private ag R&D versus investments in the public research sector.
It takes time for the public research investment to finally get the result out to increase the productivity. And so if the public R&D slow down, then it will also take time to reflect to the resulting productivity growth rate.
I'm Rod Bain reporting for the U.S. Department of Agriculture in Washington, D.C.
The Morrison County Beef Field Day is tonight over at the Hanneken Angus, northeast of Royalton. Emily Wilmes, University of Minnesota livestock educator, has more on the event.
Yeah, so you're right, Scott. Tonight we're going to have our second annual Beef Field Day in Morrison County. This time around we're going to be down in the Royalton area, kind of between Royalton and Buckman. So it's being held at Hanneken Angus, owned by Ralph and Carla Hanneken. They are located at 22348 93rd Street in Royalton.
And there will be several speakers at tonight's Beef Field Day. Emily Wilmes previews that.
So our 2 extension speakers are going to be Eric Mosel. He is our cow-calf specialist in extension. And then Nicole Kenny Rambo. She is a feedlot and beef nutrition specialist with extension. And then Jamie Litke with Litke's Veterinary Service.
Rambo is a returning speaker, but as Wilmes points out, she'll be talking about a different aspect of cattle nutrition at tonight's event.
So last year she talked about creep feeding with calves, so we're switching gears a little bit this year with the mineral supplementation.
There is no cost for the event, and Emily Wilmes explains why.
It is offered free of charge thanks to our very generous sponsors, Mississippi Valley Cattlemen's Association, Egg Star, Farmers and Merchants State Bank, Sunrise Egg, Litke's Vet Service, and Hubbard Feeds. And this also does include a meal, and the entire thing is free.
And again, the University of Minnesota Extension Service Office will be hosting their Beef Field Day for Morrison County tonight at Hanneken Angus down by Royalton. Emily Wilmes again reminds producers how they can attend tonight's event.
The address, once again, it is a Royalton address, but it is outside of Royalton. It's 22348 93rd Street. The farm is located northeast of Royalton, and it's on 93rd Street is also County Road 34. So if you're used to taking that way to get into Buckman, so if you're traveling on Highway 10 and just take that exit, and if you get to Buckman, you have gone a few miles too far. The farm is about 8 miles off of Highway 10, and we will have some signs out as well. So keep an eye out for signs that say beef tour, and they will kind of point you in the right direction as well.
Emily Wilmus with the University of Minnesota Extension Service Office talking about their beef field day going on tonight down in Royalton.